Hello, I'm Steve Balch, the Director of Wealth Management and Financial Planning at Certa Financial Planning, here to give you our monthly market update for February. Our macro stance have had some changes for February, with the Fed pausing rate cuts for now. The market trend stays positive, but if the first month of the year is any indication of what 2025 will bring, we can expect resilience with some volatility sprinkled in across the financial markets. The Fed policy has been downgraded to neutral as the Fed left rates unchanged as expected, keeping the Fed funds rate at 4.25% to 4.5%. The Fed statement included the unemployment rate has stabilized at a low level in recent months and labor market conditions remain solid. The statement also indicated that inflation remains somewhat elevated and the economy has continued to expand at a solid pace. Notably, the Fed removed any mentions of progress on inflation from the statement. So the Fed is taking a less confident view on inflation. The expectation, though, is still 2 to 3 more cuts for the rest of the year. But with the pause, this has left a path a little bit more uncertain. Fiscal policy continues to remain positive as the federal deficit is estimated to be 6.3% of GDP for 2025. Leading economic indicators remain neutral. December's payroll data showed that 256,000 jobs were created for the month, significantly higher than the expected 155,000. The U.S. job market continues to be robust, suggesting that a recession is not on the horizon. Inflation, though, does remain sticky, but the most recent readings came in below expectations. Valuations remain neutral, even as the U.S. market valuations hover around all-time highs. Nevertheless, earnings and earnings expectations continue to drive the U.S. market forward for now. The market regime fluctuated between mixed and reflation for the month, but stays in the reflation quadrant for now. This still provides us with a risk-on environment. As a reminder, this regime occurs when inflation is rising while economic growth continues to be positive. The business cycle continues to be mixed between mid and late cycles. Recession risks continue to be muted as wage growth remains strong, but policy mistakes with tariffs and the Fed's rate management continue to be the biggest headwind risks for 2025. 3 questions we're monitoring. What does a good January mean? Could tariffs derail the market? Should we all be cheering for the Chiefs? We just had the best January for the S&P 500 since 2023. A greater than 2% return for the first month tends to be quite strong for a full year. Full years are up over 18% on average and higher nearly 88% of the time. Markets tend to trend and nothing shows us better than when January is up, we have an average return of 16.9%. A negative January means weakness and down an average of just under 2% on the year. Could tariffs derail the market? In January 2018, after the first rounds of tariffs, the S&P 500 declined just under 12%. In March 2018, the second round of tariffs came in and it dropped just under 9%. By June 2018, the decline measured just under 4%. Overall, it was a whipsaw year with the S&P finishing down over 6% for the year. The tariffs have caused an increase in volatility so far in 2025, but no major sell-offs. This is something we need to watch. Should we all be cheering for the Chiefs? Correlation does not imply causation, but you may want to be rooting for the Chiefs on Sunday. When a Philly team has won a championship, their wins have preceded some significant events. Luckily, there have been no major wins by Philly teams over the last years. In all seriousness, though, we are in the first year of a presidential cycle, and the first quarter tends to be volatile. So far, the markets have followed the typical post-election cycle. February is historically the worst month during a post-election year and usually does okay until about Valentine's Day. Then the historical weakness tends to take over. For now, we will continue to monitor and adjust as needed, but know that if there is volatility over this month and next month, it is fairly normal. We thank you for watching. Please feel free to forward this to anyone you believe can benefit and reach out if you have any questions.